What's good, traders? Welcome to another day in the bootcamp. If you're new to the channel, make sure you like and subscribe. If you would like to join my community, click the link in the description below. Today, guys, we are going to be talking about my exit strategy part 2. So this is not just a normal exit strategy. This is what's going to fine tune your entry and make sure that this trade is a guaranteed win, right? At the end of the day, we want to win. We want to cut our losses as much as possible, and we want to be profitable, because when we put money in the markets, we have a lot of emotions. We feel scared. We have all these mixed emotions. Sometimes you're confident, sometimes you're scared, sometimes you want to be a bit greedy. But the main thing is we want to secure as much as we can. So this next strategy that I'm going to show you guys, it's very, very important that you do this and you do it in this manner and you actually practice doing this, because sometimes when you do this, when you use this strategy, it could go wrong and you could miss out on a lot of money. Okay, and I'm going to show you examples. It happened to me this week because I used it incorrectly. Sometimes the market is just not good, and sometimes when the market is volatile, it can affect the strategy a little bit. But this is majority of the time the strategy works, and it's playing the game safe. You want to play the game as safe as possible, and you want to have a greater probability of wins. So the strategy is basically you moving your stop loss to break even. Okay, and it sounds simple, but I'm gonna really break it down to a level where you guys will be able to use it and know when to trigger the break even or the stop loss moving. Because a lot of us think that as soon as we enter a trade, let's say for example, let's say we entered a long position right now and we put our stop loss here, and let's say price moved like around, let's say price made two more candlesticks and moved right 2 to 3 pips, and you move your stop loss straight away, what's going to happen? Price is going to hit your stop entry point again, and you're going to be at break even, and the price is going to move forward and it's going to continue doing what it needs to do. So you don't want to just move your stop loss to break even immediately. There's a set procedure that we have to go through. Now, I have been trading for 5 years, guys, and I have to fine tune this a lot because the market is not always the same every single day or every single year, every single month. But I think what I've found out at the moment has been working for me for like a year and a half now. The way the way it gets triggered and makes me move my stop loss, it's perfect. Okay. So the way I like to do this is I will place a trade. Let's say we placed a sell right here. Okay. Just for example purposes, let's just say we place a sell right here. Okay. Now, oh, doesn't want to place me a sell. Okay. Now, we have to have our stop loss at a certain position. So let's just say we had our stop loss just above our key level, okay, the 2700. Okay, now let's say we have our take profit, obviously a nice to 1 to 3, which is the next key level, which is 2650. Okay, so let's just say we are into this trade. Obviously, price is starting to move. Now, what I like to do, I'm going to have notes up here, key notes, so that you guys can actually take some notes and actually use this, because guys, this is a game changer. And I'm gonna be honest, like this really can secure a lot of your money, and you be at ease. You know, you're a bit more relaxed when you hit trades, because when you hit trades, you don't want to always be constantly looking at trades. Even when price is at near your take profit, it can easily reverse and hit your stop loss, and you're like, you were up, right? So this right here is a game changer. So please actually listen and follow this properly. Okay. So what I like to do is we first place our trade. Now, the trigger is we have to, and I will actually put markers on this, we will only move our stop loss to break even once we made how much we've risked. And I'm going to repeat that again. We only move our stop loss to break even once we've made what we have risked. For example, if I risked $50, and I don't know why it keeps making this so long. Let's just move this. Let's just make this super short. There we go. Let's say this area was $50 risk. Okay, price has to be a 1-to-1 risk to ratio in order for me to make $50. So let's say now I look at my MetaTrader and we have made $50. So price is literally at here, 1-to-1. Okay, so price is at this level right here. Okay, as soon as that level gets triggered, it doesn't matter if it tapped, it doesn't matter if it's, you know, it's gone right through, it doesn't matter. As soon as you make that $50, there's a trigger in my mind, or there's a trigger on the system, whatever it is that you're doing, and you move your stop loss to break even. So as soon as that happens, my stop loss, and we'll keep the stop loss red for example purposes, and I'll make this a little bit thicker so you guys can see. There we go. We move our stop loss to break even. Now, the reason why we do this is because we have made what we've risked. Now, if the market wants to reverse and hit our break even point, it's completely fine, because I don't want to lose the amount that I risked. And if market goes back to break even, I could probably find a better entry. Now, in this case, price ends up continuing to go down, And obviously, this is a 1-to-3 risk ratio, which is over here. Okay. And so now, what do we do with our stop loss? Well, what you can do is you can keep it at break even and continue the trade, or when price gets to 1-to-2, so a 1-to-2, we move our stop loss to here. Okay, and you can continue doing that, but that's for part 3, which I'm going to indulge in later. But for today, I just want to kind of get you to understand moving a stop loss to break even. And it's actually a very good habit, very, very good habit, because once price is at a 1-to-3, let's say risk ratio, 1-to-3, right? Once price has moved to break even, you can relax, because now there's only one outcome of this trade. You either win or you're back to zero. Like literally, there's only one outcome. There's no loss. There's literally, this is a zero risk trade now. Like I can be super relaxed, because at the end of the day, like if I lose this trade, I don't lose any money. All I'm doing is I'm basically starting again from this trade, and whatever happened during this trade was a waste of trade. That's it, really, right? But if here's my take profit, I've just made money basically risking nothing, because I didn't really care about I didn't really care enough when price went to break even. And so the rules that I would say: move stop loss to break even when sorry about that, guys. Move stop loss to break even when you have made what you risked. Okay, so usually that's a, i.e., a 1-to-1 R. Okay, usually it's like that. Okay, so I'm just gonna put this at the top of here. Okay, so usually it's a 1-to-1 R. Now, what about when we are in a very, very volatile news position, or what if we're in an area where price is very volatile? Where do we move our stop loss? Well, I actually have some rules, okay? And these rules are very, very important to understand, because you could move your price to stop loss, break even, sorry. You can move your stop loss to break even. But the thing is, what if price does this, right? Price goes up. So we broke our level where the 1-to-1 risk ratio, and then it goes up, breaks our entry level, and then it continues to go to our take profit, which has happened to me many times, guys. So you're not only in that boat, like it's happened to me many times. Now, for me, when this happens, I just literally say it is what it is. Like the market clearly, it wasn't in my favor, and the market clearly just wanted to stop me out. It is what it is. Because sometimes you might have entered, let's say you entered on this candlestick, your stop loss was here, and so you move your stop loss to break even, which is here. Now this is very, very close. Let's say 1-to-1's like here. It's very, very close. You can easily hit, my entry point. Why? Because there's no valid, like there's a lot of liquidity here, a lot of area of interest right here. Price could easily come and smash this. Okay, so when do I move my stop loss? Well, number one, I would say it has to 100% cover your 1-to-1 risk to ratio, even though I said that if it taps or whatever. But this is if we're in news, or if you're unsure whether to move it or not. I would say no matter what happens, just make sure it's a full body covering the 1-to-1 risk ratio. I think that's the best time to do it. So I'll actually write that down. Make sure the body of the candlestick has covered the 1-to-1. Okay, doing that helps a lot. I would say, and I don't know why I spelled make wrong, I would also say that when news occurs. So let's say you're trading during a news period, or even if news is like 6 hours away, like, and the fact that you're holding the trade during that news period, you want to be aware that you don't have to, if you don't want to, you don't have to move your stop loss to break even. So during news, when news occurs, you don't have to move stop loss to break even unless you want to. And the reason for this is because the market will be very, very volatile, and you don't want to hold for too long, and especially when the market is volatile, like it can really go up and down like this. And I'm going to show you guys an example happened to me yesterday, and unfortunately, I'm actually grateful actually that I didn't lose any money, but if I held it, I would have made a lot more money, if that makes sense. So even though like I secured some money, but the thing is like I could have made a lot more money, but because I moved my stop loss to break even a bit, it wasn't too early, but because of the news and the volatility, it smashed my stop loss, which was at break even, and then it continued to go in my direction, which I'll actually show you guys quickly. So actually in this position right here. So I had a trade running right here, and my trade actually was a 1 to 3 risk to ratio. We actually closed at 1 to 2, but it was actually a 1 to 3 risk to ratio, which is right here. And so you can see that we smashed our TP, right? We literally smashed our TP. However, if you see, look, price comes down. Oh, price comes down, comes down, 1 to 1. I move my stop loss to break even. Look what happens. News occurs, price comes, smashes my break even point, and then comes right back down, and then continues to go up, and then comes right back down again. So when market does that, you just got to look at it as it is what it is, type of trade. You just got to move on. Like that happens to even the best of the best traders. It doesn't matter, guys. So don't feel like, oh, when I move my stop loss to break even, like this trade is such a good trade, I really want to hold it. Like, trust me, guys, just doing this move here is going to prevent you from having unnecessary losses, because I've been in trades where, like this trade is doing right now, right? This is just a theoretical trade. Like price is clearly is going down, but I've had price where, I think it's going to continue to go down to hit my take profit, and then what happens? It goes right back up to my stop loss. And I've had trades like this. And so even though it was a very, very good trade, and it wasn't my fault that the market went up, the only error that I made was my take profit, and I didn't take my profit. And so why do I have to pay the price for that, right? So in order for you not to pay the price for that, I would say the best thing to do, and especially if you're trying to scale an account, this is what's going to help you scale an account. I would say, moving your stop loss to break even as soon as you hit that 1 to 1 risk to ratio. Now, a lot of traders have their own rules. A lot of traders have like a trading stop loss. So their stop loss, they kind of like half the percentage of their risk and stuff like that. I think that's all confusing. I would say this is the most simplistic way for you to continue, like hold your trades, but also have a risk-free trade. This stops you from panicking while you're in a trade. This prevents you from having that fear of missing out, because if the trade ends up reversing on you, you are in the clear, you are fine, because you have that risk-free trade. Number three is you're not anxious anymore. You're not actually have to hover around the trade, because you know that whatever outcome it has, you're not losing. So this puts you at 100% full advantage in the market. Now, as a trader, guys, we need to have full advantage within the market. It doesn't matter how good of a trader you are. It doesn't matter if you're in a crazy win streak or even losing streak. This right here can actually take you out of a losing streak, by the way. This right here could prevent you from having that losing streaks, right? But like I was saying, it doesn't matter what kind of trader you are, doing this, just the bare minimum, will help you secure a lot of trades and help you with your psychology. Because now, trades like this, where it just continues to go towards your take profit, you now can have the leverage to move your stop loss to break even. And then once you move your stop loss to break even, you can now relax. You don't have to worry about this trade, because at the end of the day, if the trade hits your stop loss, which is break even, which is $0 made, $0 lost, $0 made, now you can look back and say, okay, how did this trade, what went wrong, and how could I have improved? And so you have data that has been created for free, basically, right? So you had no reward, you had no loss, but you've basically got data for free where you can look at and see, okay, how was this trade? Now, sometimes you might have a really, really lucky trade and price goes in your favor for a little bit, right? However, you might have your take profit a little bit too deep, a little bit too far from your entry point. And so, even though 1 to 3 risk ratio is a sweet position, it doesn't matter like how far it is, right? Sometimes the trade can just reverse on you, like literally out of nowhere. And so moving a stop loss to break even prevents all of those unnecessary losses. There's going to be losses which you have, which is like price as soon as you enter just reverses on you and just continues to go into the direction of stop loss. But once you have a 1-to-1 risk ratio, and the reason why I specifically said 1-to-1 risk ratio is because now I have my stop loss area, and I'll just put this as a box. This area, right, has now, if I just move this, has now become this area. So it's like I'm risking my profit at this point. So I'm in all favor of this trade. And so doing this has helped me so much, right? And so we can go through trades together and I can show you like, I don't know if I have any recorded trades on here. Okay, no recorded trade. Let's have a look. Have I got any recorded trades here? Nope. I don't know if I think this is the only trade I took this week, because I know I had a gold trade, but I removed that when we were doing the call. Ooh, I don't think I have a trade. Yeah, I don't think I have a trade, but let's have a look at this trade because this trade was a picture clear trade, right? So cool. Let's say we enter on this trade. Okay, we enter on a buy right after this candlestick, right? Because we had a rejection, boom, 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 boom. Okay, now remember the rule I told you, you want to move your stop loss to break even at a 1-to-1. Okay, so even though we had price go towards our profit, towards our area, we do not move our stop loss until we have a 1-to-1. So we don't actually get triggered at this level, we get triggered at this level. So all the traders that are out there that are being impatient, that were like, oh, we're in profit, I'm going to move my stop loss to break even, they got stopped out within a few hours. They literally got stopped out. And then what happens? Price spurges up to their targets wherever they want to go. Okay, that's 1-to-1. Now, if I did have a 1-to-3, right, we got triggered over, I think it was just over here, right? 1-to-1. And so this is the 1-to-1 risk ratio. My stop loss gets moved to break even, which moves to break even at this candlestick right here as soon as this candlestick closes. So literally right after here. And so now I'm in a trade like this, where technically looking at it, like I just want you guys to visualize, technically the trade is like this and stop loss is here, and we're gonna continue to the 1-to-3, which is here. Okay, so technically the trade looks like this, but this gray area is our profit. Now this gray area is the market's money, and this gray area is something that you don't have officially, but you can leverage off the profits that you make. So even if price does try to reverse and go back to your break even, it is what it is, you move on. But that's technically what your trade looks like once you move your stop loss to break even. Okay, but obviously for this trade purpose, obviously it's not like that, but I'm just trying to make you visualize so that you can see. Okay, so you can do this on a lot of trades, but be aware, don't, even though I say that move your stop loss to break even at 1-to-1, a lot of you are going to try and force that move, try and force that trigger. Don't move your stop loss, first of all. Like, don't move your stop loss until the 1-to-1 RR has occurred. Okay, I can't stress this enough, guys. Like, if you rush that process, if you rush the process of, okay, I want to have a risk-free trade, price is moving up and down, but I just want to move my stop loss to break even, what's going to happen is you are going to get stopped out immediately. Like, I cannot stress this enough. So, and the reason why I'm saying this is because a lot of us are so impatient. We want to move our stop loss to break even, especially when you hear about this trick that, you know, traders have. You suddenly want to do it with every single trade. You're not going to have this on every single trade, by the way. Okay, there's going to be some trades where you don't even realize it's hit 1-to-1 and it's already hitting your 1-to-3, and it's like, okay, I didn't even have to move my stop loss. But there's trades where it gets choppy around 1-to-1 and you're not sure and you want to just hold your risk, because at the end of the day you knew that you're risking this much anyways, that sometimes you don't even want to do it, right? So for example, like with this Euro USD trade, if I just kept my stop loss as it is, I would have weighed way more than a 1-to-2 risk ratio. Now, I'm not ungrateful for the 1-to-2 risk ratio. However, I would have prefer to have a 1 to 3 because that is my rules. The reason why I left here was because that was one of my take profit areas. And when I saw that news is occurring, I just wanted to leave as soon as possible. But if I was to hold during news or during any moment where price is very, very volatile, I would personally hold my stop loss to where it is because I know all the time that my stop loss is at a good level. If you are afraid of your stop loss or the wherever your stop loss is, watch part 1 of the video because part 1 of the video actually I explained to you exactly where to keep your stop loss and where to and how to handle your trades with regards to your exit strategy. So I'm not going to talk about that in this video, but when it comes to your stop loss and moving it to break even, this is the rules that you got to follow. So write this down, guys. Write these keynotes down and actually follow it. Okay. Move stop loss to break even when you have made what you have risked. Important. Like I would say, put that highlighted in red, if anything, like literally highlight this. Okay. Make sure the body of the candlestick has covered the 1-to-1. Okay, I don't care if it's a wick. I don't care if it was so close to 1-to-1. That doesn't count. It has to have a body into 1-to-1. Okay, because if it was a wick, it's like, has it hit 1-to-1? Yes, and make sure you're looking at it as within a time frame that you've entered. So if you entered the 50-minute time frame, look at the 15-minute time frame. Like I enter on a 50-minute time frame, so I'm always going to look at the bodies of the candlestick on a 50-minute time frame. Now, if you're looking at your MetaTrader 4 app, as soon as you see price, for example, if we risk $50, as soon as you see price get to $50 or go past $50, yes, by all means, move your stop loss to break even. However, it would be better if you wait for the body of the candlestick. So this is like, I would star this. I wouldn't say like 100% do this because sometimes like you might just want to move it, but I would say doing this is like a guaranteed win. And then when news occurs, you don't have to move your stop loss to break even unless you want to. This is not a rule that is written in the books. This is just an unspoken rule that a lot of traders do to gain leverage off the market and be more comfortable with their trades and be more confident with their trades as well. You don't have to do this, but when I tell you guys, this changed my game completely because I was not scared of trades. I was not, looking at the trades. Like I was literally just completely fine with the trades. I didn't have to do anything with regards to the trades, especially when I was on a risk-free trade. It was like, it is what it is at this point. I don't really care about the trades because even if it does go in the other direction, I already know that I can just go another day and look for a trade. So that's pretty much it, guys, when it comes to this. Tomorrow is going to be more in depth on your exit strategy, and it will be an add-on to this strategy. So if you don't understand this strategy yet, rewatch this video and then move on to the next, because I don't want you to listen to part 3 because it can affect your trades and you might end up ruining your trade. So please understand this section first before you go to the next section, guys. But other than that, guys, I'm gonna see you guys tomorrow. Okay, so see you later, guys.